What's going on, YouTube? Welcome back to another video. I'm your mentor, Arkhamtrades, and in this video we're going to be breaking down this trade here. I was able to short right here at these highs here, scale into my position for this turtle soup at the exact highs, and we're able to buy our position back at these exact lows. And in this video I'm going to teach you guys the daily bias and the analysis behind this trade and how I'm able to catch the highs and the bottoms every single day. As well as I'm going to give you guys the risk management as well as psychology behind these trades here, so you guys not only learn from this video from a technical standpoint, but you guys also get the fundamentals behind the risk management and how I'm able to control these trades and maximize my overall reward while decreasing my risk. There's a lot of value inside this video when it comes to mastering turtle soups, so I advise you to watch the whole thing because I create a daily bias, I create the analysis, I go from the higher time frames to lower time frames. I give you everything that you need so you guys can learn from this video and implement it into your own trading, so you guys can do the same and hopefully make your first $10,000 or $100,000 trading. With all that out of the way, make sure you guys leave a like on this video. It only takes 2 seconds and it greatly supports the channel. Thank you. We're on the day time frame here for the S&P 500, and the first thing that I want to pay attention to on the daily time frame is what has the prior daily candlestick done. So we can see this was the prior daily candlestick before the new day started, and some key things that I want to look for on the daily candlestick is obviously the prior day highs and the prior day lows as potential targets. So we can identify this prior daily high right here as well as this prior daily low. We can see the prior daily candlestick came lower, tapping into this daily fair value gap range, right? This is very important. We came lower, tapping into this daily fair value gap range, a massive rejection from that overall level. When we have big rejections like these on the higher time frames, daily, 4 hour, and even 1 hour, we want to split these levels up into quadrants. So we can go from the low of this long wick candle to the high of this long wick candle here, and we can get our 25, 50, and 75% of this long wick level. These three levels right here, the 25, 50, and 75, these act as support and resistance levels. So if we can see the new day open up and see a drop lower in either the 25, 50, or 75, or even near the 25% and establish a low, this would then be classified as our overall low of the day, and we can see overall higher prices reaching back up into the prior daily highs. And I say the prior day highs over the prior day lows because price came down into this daily fair value gap and gave this massive rejection. I then classify this now as a strong low point. So we have this level of support right here, price comes down into it and then leaves it. This is now a strong low. So when I'm anticipating a pullback inside the marketplace, I'm not anticipating price to take out this prior low. I'm anticipating price to come back into within the 50% of this range here, which would be around the 25% of this long wick level, to find support to push back higher prices. So essentially my overall emphasis today was I want to see price open up on this new daily candlestick, see a drop lower into the 25% of this range to establish some type of low to reach back above higher prices, taking out these prior daily highs, right? When it comes to creating a daily bias on the higher time frames, it just means paying attention to what has the daily candlestick done and marking out your previous daily highs and your previous daily lows. Now I'm going to go down to a 4-hour time frame to get additional context. So I'm currently down on the 4-hour time frame, and some key things I want to take note of obviously is this 4-hour bullish order block right here. We had this previous fair value gap on the day time frame like we mentioned, then we created this bullish engulfing candlestick, completely breaking above this prior last down close candle. So this would then be classified as a change in state of delivery on the 4-hour time frames because we came lower, tapped into a higher time frame point of interest, and we broke back above this last down close candle, meaning the overall signatures of today's market would then be bullish for a continuation higher. So essentially when it comes to the 4-hour and the 1-hour time frames, I'm kind of paying attention to overall PD arrays and the structure of the markets, seeing that we had this change in state of delivery breaking back above this last down close candle. The overall structure or the order flow would then be classified as a bullish order flow, and obviously we have these previous day highs and we can see we do have this gap above it. So my overall draw on liquidity for today would be to see higher prices reaching back up into these previous daily highs. So I'm anticipating price to come lower, find a level of support at this order block level to then see overall higher prices coming back into these prior daily highs or back into this fair value gap level right here. So as we can see, we have the opening here of this bearish fair value gap. So I'm anticipating higher prices to reach back up into this level. And I know a lot of people will say, well, we have a bearish fair value gap right here. How come you're not using this bearish fair value gap right here on the 4-hour time frames? Well, I'm not using this bearish fair value gap right here because price has already created a change in state of delivery. This change in state of delivery, after tapping into that daily fair value gap, breaking above this last on close candle, this would classify as a change in order flow from a market maker sell model to now a market maker buy model. And when we're inside of a buy model, we don't want to be shorting within bearish PD arrays. And if you're ever going to short inside of a market maker buy model, it has to be for a overall turtle soup, for a retracement back into the range before price continues even higher. So my overall emphasis is not to short inside this bearish fair value gap anticipating lower prices, because we are in a buy model, because the order flow has shifted from lower to now higher prices. Now I'm going to go down to the 1-hour time frame and get additional context. So now we're down on the 1-hour time frame here, and I want to pay attention to this Asia range, right? The Asia range is between 8 to 12 a.m. EST. And as we can see, as price taps into this 4-hour order block, we take out these Asia range lows. This is a high probability buy model to reach back above higher prices. We not only took out a level of liquidity, but we're inside of this 4-hour order block level. This wasn't the trade that I took, but if you guys are looking for a solid refined model, this is one of my A+ setups. But we can see we had these Asia range lows, swept them out, and now we're anticipating higher prices. And now my drawn liquidity would be reaching back above these original highs back up here, which ends up being the London session highs. On the 4-hour time frame, this just looked like a fair value gap, right? We had this bearish fair value gap right here. But on the lower time frames, the opening of this bearish fair value gap is a liquidity high. So on the 4-hour time frame, we already know a fair value gap is a 3 candlestick formation, which we have this high right here. Then we had this middle area creating the imbalance, and then we have the opening of that fair value gap right here. This high right here, the opening of the fair value gap, is a liquidity pool. So essentially, if we can see price come back up into the opening of this bearish fair value gap, this would then be a liquidity sweep. And if we can see some type of rejection, and I'm going to talk about this a little bit more here on the lower time frames, but just to let you guys know, I was anticipating price to find support at this order block level to find higher prices back up into this liquidity high here inside of that 4-hour fair value gap range. Now I'm going to go down to the 15 minutes time frame here, as well as the 5 minutes, and I'm going to frame my overall execution and how I was able to catch this trade. Now I'm on the 15 minutes time frame here, and just a quick recap, we have these liquidity pools at these highs, we have the bearish fair value gap on the 4-hour up here, then we had the sweep of these Asia range lows. This is what this is. Then we have this orange level, which is that 4-hour order block, and obviously this dotted line here, which is your 25% of that daily candlestick. The market is very algorithmic, and all of these points are very important when it comes to creating a daily bias. It's simply just identifying my higher time frame levels of resistance, identifying my higher time frames levels of support, as well as identifying my overall draw on liquidity. My narrative is price action is currently in a bullish order flow, creating a market maker buy model of the curve. We can come down into this 4-hour order block as a level of support to reach back above higher prices, and these prior highs would then be my liquidity pools of targeting. Coming down to the 5 minutes time frame here, we did have news at around 10 o'clock. So unfortunately, when price came down into this order block level, I was not able to frame a long setup, because as you can see, as soon as 10 o'clock opened up, right, I wanted to see it come down into this order block level once again, but unfortunately it opened up and pushed higher, and price at this point was already too far gone. So I didn't want to be in a position to where I chased the market. So unfortunately, on the long setup, I did miss it, and I had to wait for price to continue pushing higher and higher to catch the turtle soup. So essentially, the turtle soup is the exact entry you guys saw in the first second of this video. So unfortunately, I missed the long setup at these lows, but this would have been a higher probability setup. Something I could have probably did differently was I probably could have taken the trade before news, right? We had this order block level here. I was anticipating this to be the CISD. I probably could have taken the trade before news and had a stop loss down here. And if prices did come lower to stop me out because of news, I could have just re-entered my position. This first trade being a miss, miss. That was completely on my end, but it's completely fine because the market always offers another opportunity to make money. I'm not going to just chase the markets higher here just because it's going higher. I'm going to wait for price to present me another opportunity to maximize my position. I'm going to let this play out here. We have these liquidity pools at these highs, plus we have that 4-hour opening of that bearish fair value gap, which I mentioned right there. So I'm anticipating price to come into either this liquidity pool or that opening of that fair value gap to then frame my short setup. So as we can see, price continues even higher. I was also looking at this as well. We had this bullish fair value gap. I wanted to see price come down into this bullish fair value gap right here. Unfortunately, price did not do that, so I did miss my entry right there. It is what it is. And then we can see price comes back up into this London session high right here. This was around 10:30 right there. Price came down into this fair value gap right here. I did not take this long setup at all. And we can see price creating another bounce here, tapping into the opening of this fair value gap on the 4-hour time frame. So just like we mentioned, on the 4-hour time frame, we had that bearish fair value gap right there. And on the 15-minute time frame right here, we can take note of this 15-minute fair value gap right down at these lows. At this point in time, I was anticipating, okay, price on the 15 minutes time frame created this bullish fair value gap, as you can see, and on this 15 minutes time frame, the fair value gap is unfilled, meaning price never came down into this 15-minute fair value gap, meaning that if price can find resistance at this previous high, which is also in alignment with that 4-hour opening of that fair value gap, right? If price can find resistance at this level, we can see a pullback into the 15-minute fair value gap at these lows for a turtle soup setup. And as we can see, price has overall extended for about 60 points. So the market is a series of expansions and corrections. Right here, we had an expansion to the upside. Now we're anticipating a correction lower. So essentially for an expansion higher, I would rather take the turtle soup setup, anticipating that correction to then frame back lower. And this is what I like to call a sell to buy. So I would sell at these highs, buy it back at these lows, and then buy the lows to sell back at these highs, right? This is just an advanced concept that you learn. This is more of an advanced concept, right? Anticipating the turtle soup to then short at these highs here to then buy back at these lows, reaching back higher prices. Once we tapped into that opening of this fair value gap, I was anticipating this has to be the turtle soup here at around 11 a.m. and we can see price coming back down into the 15-minute of this fair value gap. So now I'm gonna go down to the 1 minute time frame to frame my entry. I'm on the 1 minute time frame here, and we can see we had price tap into that opening of that 4-hour fair value gap, right? This is what this line is, that opening of that 4-hour fair value gap. And then we can see price break back below the last up close candle right here. Just like I mentioned, this is referred to as the change in state of delivery. So my first short position right here as price created that change in state of delivery off of this candlestick right there. And I had a 10-point stop loss at the time. So my stop loss was all the way back up here for 60.90 right here. This was my original stop loss, right? I was anticipating this was the change of state of delivery, and we can see lower prices coming back down into around the 25 to 50% of this fair value gap. If you guys don't know, right, when we have a bigger fair value gap, which as we can see, that 15-minute fair value gap, we can split them up into quadrants. So we have the 25 to 50% and 75% of that fair value gap. I was just targeting back down into the 25% of that bullish fair value gap at these lows. And this would have been a 1.38R setup. Even though this was a 1.3R setup, I do eventually scale into my positions. So if we could see price come back into this original high here and create a turtle soup and drop lower, I would scale into my position. Or if price came back into this high point and then drop lower, I would also scale into my position, maximizing my overall reward, and obviously adjusting my stop loss back above this high here or back above the turtle soup high. This is just the overall risk management that I use within my trading system. So essentially at the high point or the low point, I can then adjust my stop loss, maximizing my overall reward. And if price did come all the way back up here and stop me out and did not give me a confirmation, well, this would have been a small loss. I'm gonna let this play out here. I'm gonna mark out these previous highs here, and I want to see how does price react at this last up close candle. So as we can see here, price comes all the way back at this high point, creating this turtle soup setup. We can see a sweep back up of these highs, and we could see the marketplace reaching back lower and lower prices. It was at this point that I actually scaled into my position around, so my entry ended up being around up here. So seeing how price swept these original highs and started to see continuous breaker structures, I scaled into my position right there, adjusting my new stop loss back above this high right here. So my overall risk to reward went from a 1.38R like we mentioned to now an overall 4.06R. This is very important when it comes to scaling in, right? When you get that confirmation, you add to your winning position and you maximize the reward. And if you don't get that confirmation, if price does end up taking you out, it ends up being a small loss, right? These are the little things that are very important when it comes to becoming a profitable trader. So as we can see, we scaled into our position right here, and then price comes back into this 1 minute fair value gap right there. And then as we can see, price just sees a nosedive lower, tapping into my take profit all the way down at these lows. Price does end up coming to the 50 and the 75% of that 15-minute fair value gap, and this ends up being the exact low right there before the market does overall see a reversal back higher. So we're able to short at these exact highs here, calling the exact high of the day, and we're able to buy back here at these exact lows perfectly. In this video, you guys not only learned the daily bias and analysis behind this trade, but also a top-down analysis approach from the higher time frames all the way down to the lower time frame executions, as well as we talked about risk management, right? Scaling into my position, making sure my losses are small and my winners are big, as well as overall psychology. Seeing how the marketplace was going higher and higher, I knew not to have FOMO because the market was always going to present another opportunity. You guys have to exercise patience whenever it comes to trading and always trust your setups. So as I do want to give a big shout out to one of our Spark University students, Tony. She started her trading journey. As well as I do want to give a big shout out to one of our Spark University students, Tony. She started her trading journey kind of rough, getting scammed by some other mentors, and then she came across my brother Spec Trades, and thanks to my brother Spec Trades guidance, she's now able to withdraw over $1,500 every single week across all of her prop firm accounts, which is about 3 accounts. So $1,500 times 3 accounts, she's making around $5,000 every single week trading. So 6 months ago, she didn't know much about trading, got scammed by some other mentors, came to me and my brother, learned our concepts, learned inside of the Spark University, put in the time, put in the effort to learn, implement, and do everything that she needed to do to become profitable. And now she's making 10 times her original income off of trading, and now she trades full time and she's forever grateful. This is a huge congratulations to Tony. Make sure in the comments you guys say good job Tony, congratulations Tony, just to let her know that we do see her success and she's doing amazing. And if you guys want to learn from me and my brother just like Tony did, access to 100+ lessons, daily live trading, weekly webinars and backtesting, as well as additional PDFs, ebooks, and everything that you need from a technical to a psychological to a risk management approach, so you guys can go from a beginner trader to a profitable trader within the next 6 months. Make sure you guys click the first link description and join the Spark Trading community. So essentially that's gonna be it for the video. I hope you guys got a lot of value from this video. Make sure you guys leave a like and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Thank you for watching. Be safe.